Hey everyone, and welcome back to this brand new video. One of the coaches at the Unga Academy here, and in this brand new video, we're going to be talking about two strategies that have performed well in the out-of-sample period, post-development period, to give you some interesting insights for your automated strategies, and of course to increase the diversification of your portfolio. However, before we begin, as always, I invite you to please go and subscribe to our channel. It's very quick and very easy. Go and click on the notification bell and leave us a like to this video as well. Thank you so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alrighty, so these two strategies that I've mentioned work on crude oil and the S&P 500, certainly two of the most important and well-known futures in the US futures landscape. And both of these strategies enter on the crossing of round numbers. For example, this strategy for crude oil opens a new position whenever the market crosses rounded numbers in steps of 5 points. Like in this case, for example. You can see that there was a short entry associated with this level of $80, the round number of $80. Two other entries here the day before ended with a stop loss. And then the market was down to $75 on the following days. And here's another rounded number in steps of 5. And then the market recovered. On the other hand, if the market, let's say from the bottom to the top, crosses the level of the rounded number here, we enter long. And that's what happened, for example, on November 30th. The positions are closed at the end of the day, and the same applies to the other strategy, the one for SP 500. And as I mentioned earlier, it works in steps of $5. So let's take a closer look. Here, for example, at the $85 level, you can see how many positions were taken. For example, also at the $90 level. In shorts, in steps of $5, this strategy goes in and out of the market. Now, this is a strategy that was developed in 2019, specifically May 2019. Let's go and see where it is. Yeah, here, we could say around this time. And you can see that in the out-of-sample period, even though it was, let's say, not a very easy testing ground, because in the years after 2019, there was, of course, a lot of volatility in the markets, as well as some global instability, the wars, the pandemic. In the last couple of years, it's been really difficult. And so it certainly wasn't easy for the system, which had seen a very good profit performance immediately after it was developed, but then went through a period of slack, if you will, where it's been sideways and didn't produce any profits. But the fluctuations were still important. And then in early 2022, in the first months of 2022, the strategy resumed performing very well and was finally able to make some really good profits. Even better than we saw in the in-sample period. When you're using a product like a futures and you want to develop a strategy like this that enters at precise price levels, it is really very important not to use back-adjusted instruments. Using a non-back-adjusted future lets you see, let's say, or rather not see, should we say, the effects of rollover on the price of these products, which, as you know, have an expiration. Back-adjusted are contracts that are artificially created, and they can be very useful in certain cases. We could say for almost all developments, but not in this case. So I recommend that if you want to try your hand at this kind of strategy, create custom futures, not adjusted for maturity. Okay. But let's just move on to the next strategy. This is a strategy like the previous one that enters both long and short. In this case, it will have predominantly long trades. And that's why we're developing in a market that has a predominantly bullish bias. Of course, yes, last year wasn't so compared to the previous years, but still, historically, these are products that tend to go up. So it's preferable to trade them with more bullish positions than bearish positions. In this case, the round number step is built around the 50 threshold. So the SP clearly has a much higher number of points than crude oil. And that means that a significant threshold, of course, has to be broader than it has to be in a market like crude oil, for example. In this case, the threshold is actually the 50-point threshold. For example, here you see trades taken at 3,950. Let's try to scroll through the chart. There are other trades, 3,950, 4,000. Also, clearly there's 3,800. So every time the market reaches the round number of 50 points, our strategy will try to enter the market. In this case, both in trend following mode, when the market goes from below to above that level, as well as in mean reverting mode, for example, as was the case in this example here, you can see that the market has gone down to touch our level. And here at 3,950, the strategy entered. The strategy was developed earlier than the previous strategy in 2017, and it has the particularity of having a really very short take profit. In fact, the time frame used is the 5-minute time frame, so there's no problem reading our backtest. $900 represents a move, a fluctuation of 18 points, which wasn't that little until a few years ago. But more recently, with the growth of these markets, the 18 to 20 points threshold has certainly become easier to reach. The stop loss is $2,400 on the long side, which is certainly a very high level. But the point here is that with a market like this that tends to bounce and rise, it pays to have a wider stop loss on the long side. Whereas on the short side, well, we're going to have a more limited stop because we want to limit the risk a little bit more on the short side, at least as far as this strategy is concerned. On the other hand, the target on the short side will be much bigger than on the long side because, as we know, at times when the markets are volatile and panic, these markets tend to move very violently, and therefore with a bigger target, specifically $2,500, we'll try to take advantage of exactly those moves when the market goes down. All right, let's go take a look at the report on the strategy, which, as I mentioned before, was developed in 2017. This is more or less here. And as you can see, it has produced some very good results immediately. 2017, 2018, and I'd say 2019 as well. Then, of course, came the pandemic and the volatility in the markets. I must say, just like the previous strategy, this system has also experienced a sluggish period. And then in early 2022, we can say that things started to go up again, to move up towards new highs and with some great momentum too. Let's go and check out the average trade of the strategy. As you can see, the strategy made 1,700 trades, which is a lot in more or less 14 years, because the results we're seeing here from 2008 to 2022. And as you can see, the short side has around 1/3 of the trades compared to the long side. The average trade of the system isn't that large, but it is still enough, large to be able to trade on this market, because as you know, the SP 500 is really a very liquid market, so it doesn't cause any particular slippage during live trading. Now, these two strategies, I think, can be used in a well-diversified portfolio of strategies where you have systems that enter at more standard levels, such as the high and the low of the previous session. So with strategies like these, you can further diversify your portfolio, and why not, also try to take advantage of trends that might be based on the book, in this case. Because most likely in conjunction with round price levels, so with round numbers, traders tend to place a higher volume of orders, and that moves the market. All right, guys, we really hope that you enjoyed this video. And if there is anyone among you who is interested in the world of systematic trading, I suggest that you go and click on the link in the description of this video. From there, you can watch a free presentation by Andrea Unger, our founder, and the only 4-time world trading champion in real money trading. Or you can go and get our best-selling book by just covering the shipping costs. Or even, book a free call with a member of our team. If you enjoyed this video, please leave us a like, subscribe to our channel, and click on the notification bell so that you can stay updated when we release new videos. And with that, we will see you soon in our next video. Until then, stay safe. Bye-bye.